Have you ever wondered why some people seem to build wealth while they are still young, while others spend years trying to catch up? What if I told you that one of the most powerful wealth building tools in Ghana is available to students, even if you don't have thousands of cedis? Most students think investing is something they will do after graduation, after they get a job, after they start a business, after they make more money. But that mindset could be costing them years of wealth creation. In today's video, we are going to break down the Ghana Stock Exchange in simple terms and show you how students can use it to build long-term wealth. Let's get into it. What is the Ghana Stock Exchange, you may ask? Imagine your favorite company needs money to expand. Instead of borrowing all the money from a bank, it decides to sell small pieces of ownership to the public. These pieces of ownership are called shares. The Ghana Stock Exchange, or GES, is the marketplace where people buy and sell these shares. When you buy shares in a company, you become a part owner of that company. Yes, even as a student. You don't need to own the whole company. You need to own a small piece of it. Some companies listed on the Ghana Stock Exchange include MTN Ghana, Guel, EcoBank Ghana, and several others. As these businesses grow and make profit, shareholders can benefit in two main ways. First, through an increase in the share price. Second, through dividends, which are payments made from companies' profit to shareholders. Think of it this way. Instead of only working for money, you are allowing your money to work for it. You would ask me, as a student, why should you care about investing? Now, you might be thinking, I am just a student. I don't have enough money to invest. But here is the truth. When it comes to investing, time is often more important than money. Let's compare two people. Student A starts investing small amounts at age 20. Student B waits until age 35 before investing. Even if student B invests more money later, student A has a powerful advantage: time. Time allows compound growth to work. Compound growth simply means your money earns returns, and those returns start earning returns too. Over many years, this creates a snowball effect. The biggest mistake young people make is believing they need a lot of money before they start investing. In reality, successful investing is more about consistency than size. Starting small is far better than waiting for the perfect moment, because the perfect moment rarely comes. Now, if you're a student or anybody who want to invest in the Ghana Stock Exchange, here are some simple terms you need to know that would help you and guide you, make you learn the process faster. Before investing, let's understand these few simple terms. The first one is shares. These are units of ownership in a company. The second one is dividends. These are payments made by companies to shareholders from profits. And then we have capital gain. This happens when you buy shares at one price and later sell them at a higher price. Portfolio. This is simply the collection of investments you own. So let's say if you buy an MTN Ghana share, that is just a share. But if you buy an MTN Ghana share and buy an EcoBank Ghana share and buy a Sapreco share, all those three combined is what we call a portfolio. And the last one you need to know is risk. This refers to the possibility of losing your money or seeing the value of your investment decline. Understanding these basic terms will help you make smarter investment decisions. Now that we are done with all of that, let me show you how you can start investing. So, how do you actually get started? Step 1, learn before you invest. Learn as much as you can about the Ghana Stock Exchange before you start investing. Never put money into something you don't understand. Spend time learning about businesses and how the stock market works. Step 2, open an investment account through a licensed brokerage firm connected to the Ghana Stock Exchange. If you want to buy shares, you need a broker, and some of them are registered on the Ghana Stock Exchange. Choose any of them and create an account. Step 3, start small. Don't wait until you have thousands of cedis. Start with what you can afford. Even small amounts invested consistently can make a difference over time. Step 4, invest regularly. Invest regularly. Instead of trying to predict the market, focus on investing consistently. Don't try to predict it. Focus on investing consistently because it goes up, it comes down. There will be good years, there will be bad years, but focus on investing. Step 5, think long term. The stock market is not a get-rich-quick scheme. It's a wealth-building tool. The people who often benefit the most are those who stay invested for years, not weeks, not months, years. And now, I want to also guide you through some common simple mistakes you have to avoid. Before we finish, let's talk about some common mistakes. Never invest money meant for your school fees or an essential expense. Avoid following rumors on social media hype. Don't expect overnight riches. Don't put all your money into one company. And don't panic every time the market goes down. Remember, investing is a marathon, not a sprint. The biggest advantage you have as a student is not money, it's time. The earlier you start investing, the more time your money has to grow. Don't focus so much on money you have today. Focus on building the habit of investing because wealth is rarely created overnight. It is built through small, consistent actions repeated over many years. If you found these videos valuable, hit the like button, follow us on Facebook, subscribe to Money Code Africa on YouTube, and share this video with another student who needs to hear the message. Until next time, remember, don't just work for money. Learn how to make money work for you. See you in the next video.